And so I will preface it by saying this is a presentation we did a little bit earlier this year, or at the end of last year, for farmers.gov. They have a webinar series on tax related topics, and they asked for this information. So I co-presented with Rob Holcomb of University of Minnesota Extension. This it'll probably be an abbreviated version of that program just because of time constraints for our webinar, and we don't want to go over time. But if you're interested in more information related to this, I'll reference a couple resources and things that you can take a look at. And at some point, they'll even have that recorded webinar out on their website, and they have a YouTube playlist as well. So if you're interested in more detailed information and a little bit longer webinar related to this, we can follow up and get that to you. So I did want to mention that. So if we go through today and you feel like, well, I'd like to have a little bit more detail or learn a little bit more, just let us know. So, but we did feel like for today it was a timely topic because this is something that I think people hear about, and they might know a little bit about it, but they don't maybe totally understand it or know all the details, and it can kind of get confusing at times. And so that's why we felt like it was a good topic for today. And another item or two before we get started, this is part of a rural tax education work group. And so I co-presented with Rob, who was also part of that group. If you visit their website, ruraltax.org, there is a article on that site about 1099 filings. So that's one thing I'll reference. If you use that QR code, that should take you right to the site. And you can look up, they have a number of articles on different tax topics for landowners, for farm owners, and a lot of things related to agriculture and what we see happen with agriculture taxation. So that's something that if you ever have an interest or you have a topic comes up that you'd like a little bit more information on, probably encourage you to reference that site and take a look, because chances are they'll probably have something there. But for today's webinar, we just want to talk a little bit about the significance of the 1099 form. What are some common situations that we see in agriculture? What are the actual filing requirements? And how do we kind of practically apply this for a farm business owner? And we are taking the perspective more so for a farm business owner. So sometimes you'll see 1099s from a personal standpoint. I'll touch on one or two instances for that, but like you might see 1099Bs or 1099Ss, and those are things related to like interest or dividends we might receive from a personal standpoint. Not necessarily touching on those situations, but again, what are the things that apply more to a farm business? So just a disclaimer, none of what we present should be considered formal legal or tax advice. We are just doing it from an educational perspective. But most importantly, if you have a farm business and you've got situations that arise where this might apply, we probably encourage you to work with a tax preparer or an accountant that really knows you and your individual situation and can help give you the best advice and what to do to file correctly and things like that. So we can answer some questions, but without knowing, all your facts and circumstances, we want to make sure you get the best advice related to what you are doing. And so just some brief history. I didn't necessarily know this until doing some research for the presentation, but back around 1916, 1917, the United States was getting into World War I, and they were trying to increase revenues in order to fund the war effort. And so they passed something in 1916 to do that, and it increased the revenue and taxable revenue that was coming in to the government, but they wanted to increase that further, so they created the War Revenue Act of 1917. And that basically is what caused 1099 filings. That's what created 1099 filings. And so basically it said that if there were payments of $800 that were made between businesses, then that information had to be reported to the IRS. And that's pretty much the same requirements that we see today. We'll talk specifically about that. But if payments were made, and it could be, say, two $400 payments, or it could be one payment that exceeded $800, then that had to be reported to the IRS. Just something of note. So now that requirement has been lowered just a little bit. It is now $600. But basically, those requirements are the same, and we'll talk a little bit more about that. But so back in the day, it was $800, but if you adjust that for inflation, for that time period, it was close to, I think, $40,000 or a little over $40,000. So it was a pretty significant amount that caused this filing requirement to happen. So nowadays, like I said, it's been lowered to $600. It's changed a little bit, but that is the original creation of the 1099, was from that War Revenue Act. And so why is it significant for farm business owners? It helps us report our farm income and reports our farm expense. And as we'll talk about, if we fail to file these correctly, it can lead to pretty significant penalties. And you could run afoul of some of the rules and have to owe an additional amount to the IRS because of maybe not filing these correctly. So here's a copy of one of the forms. It's a 1099 miscellaneous. You'll see some of the different boxes and things there. But the form itself does not remit any money to the IRS or to the recipient. So sometimes we think if we're filing our tax return, we're actually sending money in with that to pay our bill or whatever it might be. This is simply what's referred to as an informational return. So it is sent to the IRS, and there is a copy sent to the recipient, but all it is doing is indicating that transactions occurred during the year. Like we said, it's indicating that payment was made from one business to another, and it has exceeded that threshold. And so again, it is now $600 is the threshold. So you could have one payment that was over $600, or you could have several payments of, let's say you had 4 payments of $200, or at a total of $800. That would require a 1099 to be filed as well. And it's just a total amount would be indicated on the return. So the total is, say, 800 in that instance. That's what you indicate on the form, and that's what's sent in on the informational return. So that's a copy of the form. That's the one that goes to the IRS center. And just like with pretty much any other tax form, you can find the form itself on the IRS website, but then you also can find the instructions, and it goes more line by line and tells you what information it's looking for. It might reference a couple of other things and helps you kind of file that correctly. So there is a number of good resources out there to help you understand and learn more about the form. Like I said, just because of time purposes for today, we couldn't get into great detail on all of that, but did just want to kind of touch on it a little. And so basically what it does is it notifies the recipient that those payments were made during the year, and it notifies the IRS that those payments were made to the recipient. So for the recipient, most likely or ideally, basically, in that situation, let's say you paid someone $800 for rent, that just confirms what they have recorded through the business, that yes, Farmer A has paid us $800 for rent during the year. We've already recorded that. We've got the 1099 from them to confirm that, and they report it as they're supposed to, and the IRS gets information related to that, and that's kind of the correct way that all is supposed to happen. Generally, there's going to be 4 copies of that form. So you're going to have your personal or business copy that you keep for your records. The recipient will receive a copy. The IRS gets their copy, and then the state of the recipient. And that's kind of an important point, because it's not the state where you are filing, but it's the state of the recipient that's receiving the 1099. They don't always require a copy, and sometimes the IRS, when you filed federally, they receive that information once it's been filed with the IRS. So you kind of have to check on the state side of things, but the states typically are going to like a copy of that as well. So as we said, it's for payments of $600 or more, and this is for rents or services. So it is not for goods, and that's an important point. And it's not required on payments to corporations, government agencies, or tax exempt organizations. And so you might say, well, what if we're less than that $600 threshold? Again, that's supposed to be recorded through the businesses. So you might have $500 of rent expense and you want to record that through your business. And they might have $500 of rent revenue that should be recorded through their business, but you do not have to formally file this form. And you can, and there's no penalty to doing that, but there is a little bit of administrative time related to filing that form. So, like I said, generally these are not required on payments to corporations, government agencies, or tax exempt organizations. We'll talk about one or two scenarios where there is an exception to that, but generally that is true. And same thing, it's only when we have payments for rents and services to another business and it exceeds that $600 threshold. So briefly, we'll talk about when does a farm receive these 1099s. So you probably recognize a number of these, but if you participate in crop insurance and you receive a indemnity payment, you'd see a 1099 miscellaneous. If you participate in government programs and you receive some kind of payment from that, and that could be local, state, federal programs, you'd see a 1099-G. If you have rents for land or equipment, 1099 miscellaneous. If we have done some kind of custom work for someone, that could be we went to spray their field, we helped them harvest, something like that, we'd see a 1099 NEC. Same thing if we did some kind of consulting for them. And then if you participate in a co-op and you receive like a patronage dividend, you would see a 1099 PATR. So on the receiving side of things, it's not too complicated. We've probably recorded this information through the books and records of the farm. We receive, say, a 1099-G that confirms, yes, we received, $1,000 from this government program, and we're already aware of that, and then we formally receive that 1099-G. But in a similar way, that information is going to be sent to the IRS as well. So most of the time, these are going to be reported on our 1040 Schedule F. And, it's kind of facts and circumstances based. What's the payment related to? And just because we have a payment and just because we have a 1099 doesn't necessarily mean all of that amount is taxable. So it's facts and circumstances. And sometimes you'll see on those forms, it'll say what was the amount, and then it'll have a separate box for the taxable amount, because it depends on what the payment was for. It depends on how it can be treated. Sometimes we would recognize some for tax purposes this year. Sometimes it might be some for next year. So again, it just depends on what that payment is. And then for some of those other things that we do commonly see in agriculture, they might be reported elsewhere. So rents, non-employee compensation, and consulting may be on other forms like the Schedule E or the Schedule C. Not going to get into great detail on those forms, but again, as a farm, you might be seeing this, you might be receiving these. So once you've received a payment, once you've received a 1099, then it's just a question of what does it relate to, where should it be reported, how should it be reported, and those kinds of things. And that's also where we start to get into the value of having a tax preparer, having an accountant that you can work with and you really have a good working relationship with, and you say, hey, I've got this payment, I've got this 1099, I want to report it correctly, or what do I need to do to report it correctly? And sometimes you may receive a 1099 and you actually are supposed to send that to someone else. So it then becomes a responsibility of whoever received that 1099. So an example might be if you were renting land from someone and your name is on some things related to the farm, but their name is on some things related to the farm. But let's say, for instance, that they're the ones really participating in the USDA program. It could be a conservation program or something. And you've already agreed that that payment will go to them, but you receive that 1099 and the payment. Basically, what you would do is say, you've got the 1099, and then you send that amount to the landowner, and you create another 1099 and send that to the landowner to show that, okay, I've received this amount, but it has been transferred now to the landowner. So sometimes you can have a reporting situation come up that you may not realize it, or you may not make that additional step of reporting it to the landowner, but that's what they call nominee reporting. There's some other instances and scenarios where that can happen too. If it's like a custom work crew and the manager of that crew receives the payment in the 1099, and then they have to then individually split that up. And so they send the payments and they send the 1099 to their group, those individuals that they worked with on that. But sometimes we'll see it for a spouse perspective. You do not have to do that if you're filing with that spouse. So that's kind of on the receiving side of things, but the more critical piece and where we can kind of run afoul of the rules is what happens when we have to issue these 1099s from the business. And I don't know if you've looked at a Schedule F in the last couple of years, but there is one of the first couple lines that says, did you have payments that would require a 1099 to be filed? And then the second question is, did you file those 1099s? So they're, I guess, trying to prompt you and to check to see, make you aware of these rules, but then kind of a reminder to make sure that you've kind of paid attention to that and you've issued these if you needed to. So pretty similar situations, but this would be in reverse. Like if we have paid these amounts to another business and now we're having a filing requirement. So rents for land or equipment, 1099 miscellaneous. Again, if we've got somebody doing custom work for us of some kind, we'd probably see a 1099 NEC. Veterinarians and accounting and legal, pretty common scenarios. And this is where we see some of these exceptions come into play. So on the legal side of things, if you kind of see some different situations because it kind of depends on if it's related to your lawyer, or it could be part of compensation of a lawsuit settlement or something like that. So that's something to kind of be aware of there that can create some funny situations. And then on the veterinarian side of things, a 1099 miscellaneous must be issued to a veterinarian, even if that vet is incorporated. So that is one of the exceptions. And the total payment includes both services and products used. So if I think of typically when you receive a bill from that veterinarian, it might be itemized a little bit and tell you what was the veterinarian's time, what were the things like the supplies, medicines, and different things that were used. But if that bill, say, was $900, then that's what's indicated on that 1099 in box 6. So that is a little bit of an exception scenario, but just to make you aware of that, because especially if we think about producers that have livestock, that's a pretty common situation. A 1099 miscellaneous, sometimes they can fail to be issued because we might rent land from someone, but it's kind of informal, and we might have more like a handshake agreement with that person, and maybe we've been doing it for a long time. And so at the beginning of the year or something, you have an agreement in place. Maybe you go ahead and make a payment to them, and you just kind of go about your way and don't think much about it. Maybe especially if it's a family member or relative or something that we're renting from. But in that instance, if we've exceeded that threshold, then we should file a 1099 for that. And the way this could come up is that if then later, when we have filed our tax return for that year, and we indicated, well, we had $1,000 of rent expense, for instance, the IRS could look at that and say, okay, you've indicated $1,000 of rent. What was that for? Who did that go to? Those kinds of things. And then that kind of gets back to the question on the form of, did you have payments that would require a 1099? And then did you actually issue those 1099s? So that's how that can come up. And so, you could say, well, the landowner is going to leave it off their tax return and you're going to leave it off your tax return. But essentially, you're giving up, in that instance, you'd be giving up $1,000 of rent expense that you wouldn't be able to claim on your tax return. So that's just sort of how that scenario can work sometimes. And I think sometimes I could see it go both ways, but just as a scenario to make you aware of. This is a relatively new form, the 1099 NEC, but it is related to non-employee compensation. And so it is kind of important to determine, does someone actually work for the business, or are they more independent contractors? A lot of times what you'll hear, or a non-employee, which is when we would issue the 1099. Generally, it's easier for a business owner to just issue a 1099 to that person because there's no withholding, there's no insurance and things that we have to keep track of. So we can compensate that person and we determine maybe whatever the amount is, but it's just issued through a 1099. But you can run into some different rules and regulations related to that, and they can be pretty significant as far as the penalties and things related to that. So the IRS has information on trying to make that determination, and scenarios change. So sometimes it could be that someone was in business for us, but like they were working for us as an employee, but maybe they've since gone out on their own and they are more like a contractor now, or vice versa. They could have started out independently and now they're working a lot more for us. We have a lot more management over them. They're using a lot of tools and supplies and things related to our business. You have a lot of say-so in their schedule and things like that. So now they're probably more like an employee, but the IRS has information on trying to make that determination. There's a number of factors that they can kind of look at and that you would examine as a business owner. And if at the end of the day, you're still unclear, you feel like it's still kind of a gray area, you can actually send that form into them, the SS8, tell them the facts and circumstances of the situation, and they will help you make that determination. And I don't know that I've heard a lot of people do that, but that is an option for you. I'm going to skip over some of this, but this is kind of just related to that same thing. So how much control essentially, or how independent is that person, is kind of the main factor that they're looking at. So as I said, the 1099 NEC, this is typically when we've gotten someone to perform some kind of service for our business. And this is a copy of that form. So it's relatively straightforward. So this is the copy A, but then you'll see the copy B, copy C, and so on. And with this form, it's important. So you'll see, the payer's name, the payer's TIN, the recipient TIN, and some of the information related to the recipient. It's important to get the TIN, the taxpayer identification number, from them. And this could be different depending on who you're working with, but it could be a Social Security number, could be an ITIN, individual tax ID number, or an EIN, an employer identification number. It just depends on what they have and what they provide to you. But you have to have that information in order to file correctly for the recipient. And they report that to you through the form W-9. So typically, no withholding or anything is required on the 1099s. But if we don't have the correct information, then we do have to start having withholdings from those payments. So, and that is a rate of 24%. So typically, it's better and easier for them to provide you that correct information because 24%, I mean, that's a fairly significant percentage. And then you, as I said, you don't remit payment with the 1099, but that actually happens on Form 945, where you start collecting withholding, and then that is sent in if you do not have the correct information. So, as just a practical tip, if you are going to be working with someone, because sometimes they might not want it reported to the IRS for tax purposes, because if they don't want to, say, report different payments that they've received during the year, they may be hesitant to provide that information, and they can indicate lower amounts of revenue and taxable income on their return without having those 1099s filed. So sometimes you may ask for that information and they're somewhat hesitant to give it to you. As a practical tip, if before you've gotten anyone to perform services for you, if you can send them the information for what you need for that W-9, and that way, before any payments are made to that person, you have that information on hand for later on when you might have reporting requirements. And they're going to be more motivated probably in that instance to give it to you because they're going to want to receive their payments correct. But if you, at the end of the year, you say, okay, we made $1,000 of payment to you, will you fill out this W-9? Well, they've already received the payment. They may not want to report all that for tax purposes. And so it's harder to get that information. And so then you start to have to do the backup withholdings and some of those things related to that. So if you can get that W-9 before any payments are made, it can just help minimize some of those issues. And so we said about the different copies. So the deadline for the recipients, if it's a 1099 miscellaneous, 1099B, or 1099S, which we haven't necessarily really touched on those, but those are due by February 15th to the recipient. But all other 1099s are due by the end of January. So, if you just wanted to make a blanket rule, you could say, well, we have to get any 1099s out to recipients by the end of January. If you don't want to keep up with, kind of the differences there. As we said, you do have to provide that copy to the recipient, and we have penalties related to that if it was not filed. And we're going to talk about that, but basically it's the same penalty as if it was not filed timely with the IRS. And we'll touch on that in just a second. So for the IRS, 1099 NEC, the newer form that we just talked about, is due at the end of January. And then all other forms, all other 1099s are due either February 28th for paper, or you have a little bit longer if you're filing electronically. You have until the end of March. And we'll talk a little bit about the electronic as well. But so $50 per return if you correctly file within 30 days. And so let's say we were filing electronically. We were supposed to file by March, but we didn't file until our actual tax return. So we filed in April 15th. You would be, within that 30-day window, there would be a $50 penalty for that. And it could be $50 for the IRS copy, and it could be $50 for the recipient copy. And then the penalty jumps up once you've hit past 30 days, but if you file by August 1st, so it's $110 per informational return. It jumps up again if you filed after August 1st, or you did not file the returns at all. It jumps up to $290. And they do have an additional kind of penalty that they can hit someone with, which is what they call intentional disregard. And this jumps up to $570 per return. And it says you were required to file. You know or should have known a 1099 had to be filed, but basically that it was ignored, that that filing was ignored. So I almost think of a situation that, if you had veterinarian payments for the past 5 years, you've filed that in the past, but for whatever reason this year you just did not do it. It'd be like, that's something that you were required to file. You probably knew or should have known a 1099 had to be filed, and it was basically ignored. I don't know that I've heard of this a lot as far as having the intentional disregard penalty, but I was just trying to think of a scenario where that might be incurred. And I think that might be kind of on that line there. But just as a quick example, if you had 5 1099s that were filed in June for the recipient and for the IRS, you'd incur that $110 penalty. So you'd have $550 related to the recipient forms, $550 related to the forms going to the IRS. The total penalty would be $1,100, which is not huge, but it's not insignificant either. And it kind of depends on the size of the farm as far as how many forms that they have to file. And it kind of depends on, an $1,100 penalty for someone may not be that much, but for another business, it could be pretty significant. But record keeping software can help you keep track of this. So if you've got vendors in there that you've paid during the year and you have exceeded those thresholds, there's probably going to be a bell or something or a notice at the end of the year that said, hey, you've made these payments to this vendor. Do you need to file the form? Or it might even automatically help you calculate and do that. So it can help. And if you just want to make a note on your calendar to kind of check your books and records and say, okay, did we make payments during the year that would require us to file this? You can request time extensions for both the recipient and the IRS copy. And that's how you do it. You send a letter to the IRS for recipients, and you use Form 8809 for the IRS copy. If you have 250 or more electronically, if you have 250 more informational returns that you have to file, then you have to do it electronically. And so one way you can do that is the FIRE system, which is set up through the IRS website. So you can take a look at that. And then those who have less than 250 can still file electronically. And they've talked about lowering that cap, but at least for right now, the threshold is 250. So if you're above that, if you have 250 or more returns, then you must file electronically. There is a newer system that they were supposed to bring online earlier this year. It's the IRIS Information Return Intake System. And I think the previous system is more of like a batch if you do have a lot that you're supposed to file, whereas IRIS is more for maybe it's 10 or 15 that you need to file, but you'd like to do it electronically. I think the IRIS is more set up for that. So I haven't gotten a chance to really take a look at that, but just something to be aware of. And so if you're required to file electronically, but you failed to do so, you could be subject to those same penalties that we talked about earlier. And they really do try to encourage people to do it electronically, no matter what number of returns that you have. And if you do file by paper, you have to include Form 1096, which is just a summary, basically, of the paper returns that you're filing. As I mentioned, there is a program, the Combined Federal State Filing Program, where once the information is received by the IRS, they will go ahead and transmit it for you to the state. But you have to check which state it's going to, and do they participate in this program, and that sort of thing. So that's something where, it kind of depends on your situation. It kind of depends on who maybe the contractor is that you're working with, but just something to be aware of, to check on the state side of things. So just in summary, generally a business is going to be impacted by these. either on the receiving side or having to file the returns. So it felt like it was important to understand just a little bit about the requirements. And it's going to help a lot in just having accurate business records so that we can know the situations where we do need to file, where, are we under the threshold? Are we over the threshold? And so for a farm business owner, it's not that they can't file them themselves. They certainly can. But as I think of a small business owner, typically they have a lot of things taking up their time already. So unless they really have a willingness to learn and spend time actually doing it, that's probably where we would say work with a trusted professional. They can make you aware of the situations. They can know the rules. They can file it correctly for you, so you don't run into some of those penalty situations. These are a couple things that I use related to this presentation. IRS.gov, Pub 225 is the Farmer's Tax Guide. You can also find the form itself and the instructions there. And then, like I said, the ruraltax.org website has a lot of good information as well. I will check the chat for questions, and I will try to respond in there maybe, but I'm going to go ahead probably and turn it over to Scott because I want to make sure that he gets time before we end today. So that's my contact information if you even have questions after this presentation as well. And with that, I will turn it over to you, Scott.
All right. Thank you, Kevin. What I wanted, I'm Scott Mickey. I'm an extension associate on the Clemson Agribusiness team, and just wanted to give you some market outlook.
And for some reason, I'm not hearing your audio, Scott.
Hear it now?
I'm still not hearing anything.
Okay, let me
okay, so one of the participants said they can hear you, so it might just be on my end. So go ahead.
Okay. All right, I'm gonna keep going. What I'm gonna do is just give a brief market outlook for price outlook for 2023 for corn, soybeans, and cotton, and then we may do wheat if I have time. For me, the easiest way to kind of understand what the market is offering is to know what prices I need for my own business. And so I think understanding fundamentals is easier when we have a marketing plan. And so what I want to do is just kind of share with you what the prices that my model farm needs for 2023. And this model farm is something that you can follow along with if you subscribe to the newsletter that I try to send out about once a week. If you would like to participate in that, shoot me an email and I'll make sure you're added to that email list. So all we're going to do today is just kind of look at what these prices are and then talk a little bit about the fundamental. So the farm that I use is called Floyd Farms, and in this operation, they're growing about 1,800 acres of corn, is dry and irrigated, about 1,400 acres of soybeans. They cut their cotton to 300 acres this year, and they have 600 acres of double crop winter wheat. To break even, they need a cash price of $5.71 a bushel for corn, $12.48 for soybeans, 93 cents for cotton, and $7.60 for wheat. But if we take away our expected basis, we're left with some futures prices that they can use day to day to kind of see what the market's offering compared to what they need for their operation. Here's a surprise, but I'm going to start with corn like I always do. And what I'm sharing with you is the USDA's World Agricultural Supply and Demand Estimates. This report came out last week on January the 12th, and it's given us an idea of what the supply of corn has been the last couple of years, and also what the uses or demand for corn has been. These last two columns are not USDA numbers. They're my estimates of what we may see in 2023. The crop will begin planting in a couple months, and also the crop will plant in 2024. So as we look at this, you can see that we're expecting I'm expecting corn acres to be up quite a bit from last year. Right now, I'm thinking maybe 91 million acres. We'll harvest 83 million of that, and the trend line yield for 2023 in the US is 181 bushels. We're coming into the year with about 1.2 billion bushels of corn from last year. Production will be about 15 million, so we'd have a supply of 16.3 billion bushels of corn. If that happens, it's going to be the highest production we've seen in the last 3 years. The largest supply we've seen in the last 3 years. And that supply is going to be used to feed livestock, poultry, cattle, hogs, dairies, etc. About 5.5 billion bushels there. Some of it goes for food and seed uses, as well as industrial uses. About 1.5 billion bushels there. And then we're going to use another 5.3 billion bushels for ethanol production. Right now, I have exports at 2.3 billion, and that gives us a total demand or total uses of about 14.6 billion bushels of corn for the 23-24 corn crop. What's going to happen if we produce 16 and use 14? We're going to end up with ending stocks of about 1.7 billion bushels. That's an increase of almost 500 million bushels of corn from last year. And that's a concern because it will take our percent use from 8.9 to just under 12%. Typically, when ending stocks to use is greater than 10%, the market considers that adequate supplies, and it's difficult to get price rallies, or usually we have ample supplies for expected uses. As of yesterday, December corn futures were trading for $6.04. And so one thing that I would want to look at is how does that price compare to what my Floyd Farms needs? And if you can remember the slide before, I said that break even, I needed $5.11. So what the market is offering me today is quite a bit higher than my break even. It would offer almost $1 a bushel of profit in 23. I apologize. My office mate's a little aggravated. I'm gonna let him out. But we have about $170 of revenue over our break-even needs. And so as I look at that, I'm thinking, well, is this an opportunity to make a marketing decision? And of course, I would say yes, primarily because I'm concerned about this export number. In 2022, we export about 1.9 billion bushels, and we're showing an increase of 2.3 billion bushels. That's nearly a 400 million increase in exports, and that won't happen with high commodity prices. So in order to get this additional exports, I think prices will have to fall. We also need to watch this feed usage. It's also higher than we've seen the previous year. In fact, it's it's quite a bit higher than last year. Ethanol use is another concern, depending on what oil prices do, but we really need to have that 5.3 to keep this ending stocks from getting bigger. As we look at what the futures prices have done the last 100 days, December 23 corn prices have been drifting lower. You can kind of see this trend from back in October. We had the 100-day high of about $6.35. And back in early January, we made our 100-day low of around $5.90. Since then, we've bumped back up, but we're trading in this, this band between 590 and about 610 over the last couple of weeks. And I just have concerns long-term about being able to bump up much higher than that. So as I look at corn, I think you have pricing opportunities today, and it's something to keep in mind as you move through the marketing year. Next crop I want to look at is soybeans, and I won't go into as much detail, but soybeans is a little bit different than corn because we have a major competitor in South America who produces more soybeans than the United States does. So when we're looking here, we're looking at the US supply and demand, but we have to remember what South America is doing and how that could impact our market prices in the US. I think soybean acres will also be up in 2023, about 2 million acres. Trend line yields would be roughly 2 bushels an acre higher than last year's yield. Production will be the highest we've seen the last 3 years, and our supply would be the highest we've seen in the last 3 years also. The crush, which is basically crushing the soybean to make oil and meal, is slightly higher. The seed use is about the same. Exports are up slightly from 2022. But at the end of the day, when you look at the difference in expected supply and total demand, we see an increase in our ending stocks of nearly 100 million bushels, from 210 to 302. That would take our percent use from under 5% to just under 7%. That sounds tight, but we have to keep in mind that Brazil has a record crop in the ground right now. And if that's realized, that could put pressure on US prices and certainly impact our export possibilities. Soybeans has a little bit different price history. We can see there's not been much change since the 1st of November. We've traded from, about 13.75 or so. The high has been just a little bit over 14 or a couple of days when it pushed 14.20, but it's been relatively flat since the 1st of November. Having said that, current price of 13.93 is still better than the Floyd Farms break-even price of 12.38. So while I'm not as concerned here about the price falling as quickly as corn could, you might want to start thinking about locking in some of these prices. It just seems like it's going to have trouble getting much higher than $14 unless there's major change in Brazil's 2023 soybean crop. So again, I think right now we're just kind of watching soybeans and seeing what direction it may move, but it's been relatively calm the last 3 months for soybeans. Hopefully you felt my outlook for corn and soybeans was positive, because when we shift to cotton, it's a little bit tougher to talk about. Right now, we don't know for sure that we're going to see this slight decrease in cotton acres. Right now, I'm thinking it's going to be about 1 million acres less planted in the US. Maybe there's 2 million less. The big number to watch is what's harvested. Last year, Texas had a severe drought and did not harvest much of their cotton. If they're able to harvest, that's really going to bump this harvested acres regardless of what we plant in 2023. Trend line yield for cotton is 962 pounds. That's just a few pounds different than last year's 947 average. We're beginning with more cotton on hand than we did last year. In our production, if we harvest 10.5 million acres, at trend line yields will be 21 million bales, quite a bit higher than we've seen the last 3 years. Again, our supply would be up about 4 million bales compared to the last couple of years. When we look at the use, you can see that domestically, the US just doesn't use much cotton anymore. We've basically been trending down. We were at 2.55 million bales in 2021, down to 2.2 last year, and that's what we're forecasting right now for 2023. Big numbers is exports. They were only 12 million bales last year, but for a large part of the year, that cotton price was over $1. Maybe we can get exports up to 15.5 million bales in 2023 because of the lower price, but a lower price isn't what the US producer is looking for in cotton production. So we may have demand of 17.7, which would be the highest demand since 2020, but our ending stocks would be 7.5 million bales, almost double what they were last year. That would be a stocks to use ratio of 43%, meaning that we would start 2024 with 43% of our expected uses. That's a huge carryover, and I think that's had a big impact on what cotton prices have been doing lately. Yesterday closed at 81.5, which for a lot of operations is probably below their break even. In fact, for Floyd Farms, that price is about 11 cents too low for Floyd Farms to break even on cotton in 2023. Sorry about that. Okay. So when we look at the chart, I studied this quite a bit, trying to find something positive to say. We do kind of have an uptrend since the 1st of November. We've generally been moving this cotton price higher. It's just we've moved it from about 76 up to this 81, 82 range. We have to go back more than 100 days to when we had cotton above 90 cents. Okay? At the pace we're going, it's going to take a long time to get 2023 cotton futures back up to a 90-cent level. And even if we did, that's still 2 cents less than what my model farm would need to break even. So as you're looking at your cotton production, you really need to spend time making sure you understand what your cost of production is going to be, and look for some pricing opportunities when you can get them. But right now, I'm not looking at much bump in cotton prices in the short-term future. Maybe once the planting intentions comes out, if we see a drop in cotton acres, we may see some rallies later this spring. And that brings us to wheat. We've got our crop in the ground, is growing. It has a crop insurance price of about $8.10 a bushel. So we've got a good guarantee on our wheat crop. But just like cotton, you can see that our ending stocks to use ratio is projected to increase. We see higher exports, which may be likely with the lower wheat prices. But other than that, our total use is about the same as last year, other than the 100 million bushel increase in exports. Our supply is up primarily on higher acres and a slightly higher yield. But again, we're looking at building stocks, and that's usually not favorable to commodity prices. When we look at what's happening to wheat, it's kind of the reverse of the cotton market. Since November, we've been trending down. We started the 1st of November, $8.50, $9 range, and now we're trading down here the last couple of weeks, below or just around 750. That's disappointing given what we went through last year, but there have been a lot of years that we would have gladly sold wheat for $7.50. In fact, to break even, my Floyd Farms needs that $8.10 crop insurance guaranteed price to break even. So we're looking for some opportunities. You're probably going to be looking at the feed channel for opportunities to move some of this wheat. But again, that may be less than your cost of production. So keep your eye on wheat, know what it's costing you, what you have in it, and look for those opportunities to price when you can. So that's a quick overview of the outlook for those 4 crops for 2023. I encourage you to read my newsletter, and if you'd like to subscribe to it, just send an email to smickey@clemson.edu, and I'll be glad to add you to that weekly marketing newsletter. So with that, I'm going to turn it back over to Kevin and let you all get on with the rest of your day.
All right. Yes. Thank you, Scott. And I think, yeah, as we mentioned, if you would like more information about anything we presented today, if you'll just reach out to us, we'll be happy to get that to you. We will have updates as far as our schedule for the rest of the year and going forward. You'll probably see something through Zoom as we update the schedule, and we'll try to have that on our social media and our website as well here in the near future. So our next program will be February 15th. And we don't quite have the speakers nailed down for that, but we will update that as soon as we have it available. So again, we do thank you for joining us today, and we're pretty much right at 11 o'clock. So extension meetings have a tendency to run over, so I don't want to do that. But we do thank you for joining us today, and we hope to see you next month as well.